David Morgan on the line today, the silver guru himself. And how you doing today, David?
Doing quite well, thank you.
We are over here at the Coin.org, and I certainly appreciate everybody joining us today. And David, with everything that's been happening this week, as far as the big takedown, Monday and Tuesday, what's going on with that? I mean, it's kind of gold and silver are kind of catching a bid today. We're recording this on Thursday, the 17th, and what's going on with the market right now?
Well, it's sort of a wash, rinse, repeat. And what I mean by that is we've seen these takedowns many times, and the Commitment of Traders report is still a very good clue as far as what is taking place in the market and when to expect these kind of sell-offs, and they're pretty much orchestrated. The Commitment of Traders showed recently that there was a lot more short interest by the commercial traders, which is the people with the most knowledge, and that's, the mainstream media saying they have the most knowledge, or the people with the most clout. So if you're in the wheat market or soybean or one of the ags, it's usually ADM or one of the big conglomerates, the ConAgra, or one of those that basically has the most, money to go ahead and persuade the market, because money moves markets. Buying pressure moves it up, selling pressure moves it down. It's that simple. It doesn't get more complicated than that. So when we see the commercial traders moving one side or the other, then usually it portends that there's going to be a sell-off. And obviously that's what happened in the silver market and the gold market. And I was a bit remiss because on the Monday sell-off, first of all, if I could back up, Rory, the metals had done pretty well here a couple of weeks prior, meaning that silver had a move of almost $1 and gold had moved quite a bit, like 30 something, and it held those gains for a while. And then I saw the Commitment of Traders move the other way, and so I expected a sell-off, but I expected those support levels to hold, meaning about $21 in silver and the $1,300 approximately in gold.
Yeah.
And they did on Monday, but they went below that the next couple trading days, but they're oscillating in that area. So this is something that I said to my membership that I want to tell your listeners, our listeners, and that is that they're running out of ammunition in my view. And what I mean is that it's taking more and more short selling to get less and less of a significant move down. So this is important to know, because there is a point where the physical market will take control. We've already seen that happen a few times in the metals. And the more paper selling it takes to move the price less and less, obviously it's having less and less effect. And this is important. And this is the way I see it. This is, objective. There's a psychology in the market that they try to control, that, gold's not a good investment, silver's not a good investment. Look, it goes up and it goes down.
Yeah.
And you hear the down very often when you're listening to the mainstream media. But nonetheless, I look at it as somewhat bullish. I know the metals are off. What I'm acknowledging is that I think they're running out of ammunition. I think we're getting closer and closer to the day where we get some of these up moves, and no matter how, whatever they do in the paper market, the physical market is starting to come to the fore. It's starting to take control. It's more significant. And this is happening on a global basis. It's not just what happens in the U.S. markets that used to have almost all control with the Shanghai exchange, where you're dealing in the physical reality most of the time, and China buying in the physical reality most of the time. And then you have Germany now coming on the side of what's really going on in the gold market and what's really going on in the paper gold market. And you're having examiners looking at this, with BOFin, the regulator, looking into the banks. I mean, there's a lot going on behind the scenes that we're aware of with, information like you and Sean put out. So if you really take an objective look, you know what? These guys are starting to get pretty scared, in my view.
Well, and they need to be scared, and I think that I would like to think that entities like the Shanghai Gold Exchange and the Dubai Gold Market, which is also a massive physical gold market as well, that their influence at some point has to take over the paper, and I think that that's really what you were alluding to, is that those large physical markets are going to just blow away these paper Ponzi schemes that are going on at the COMEX, and or am I missing what you said?
No, you're just exactly on point. And, that's the whole thing. People say, well, and I get the question all the time, and I guess it bears repeating, but, well, David, they can keep doing this forever. They got all the power. They all have the paper power. But it's, the best analogy I can think of is the Wizard of Oz movie. You lift the curtain, and it's a joke. All they can do is print a derivative that says gold on a piece of paper, and it is about as far away from a physical gold coin as you can get. So yeah, they've got that power. But when you lift the curtain and say, oh, wait a minute, that's nothing real, that's pure imagination. And as you just said, and I'll reemphasize, the day's coming when the curtain is lifted. And it's already been lifted. That's
Yes.
the thing, is that you've got this thing with the delivery to Germany.
Right.
And as I just said, I won't repeat myself, but there's all these things going on. And, I thought maybe naively that it would take one or two of those things to really push the market through. And so far that hasn't happened. But what has happened is more and more is being pushed. In other words, you had this delivery to Germany that was, a couple Januaries ago. I made a big deal about it when I was at the Vancouver Gold Show, and a lot of other people as well. And now you've got the regulators looking into this. And now you've got this Chinese thing about, making these loans based on gold that doesn't exist. So there's a lot going on, and it keeps moving our direction.
Yes.
And that's important to know.
And with the BRICS coming on, and this has been known about, the BRICS Development Bank has been known about for some time now, but now it's official. Now it's official. They have $100 billion backing. The 5 BRICS nations are united as one. Do you think that this is going to have, or what type of impact do you think that this is going to have on the dollar? And do you think that it will have any influence on gold and silver?
Well, I've seen the escape of the dollar denominated transactions taking place for the last few years. You've seen a lot of trade negotiations go on between Russia and China and other entities, the BRICS as an example to back you up, and then Australia, China, India, China, Russia, China, and they're just trading with each other's currencies and circumventing the dollar completely.
Yep.
And so the amount of dollars used in world trade has dropped rather significantly. It's measurable, quite measurable. And what I allude this to is the escape velocity. And the escape velocity is when the dollar is not used. And of course, that's impossible. But what I'm saying is that as this accelerates, so escape velocity is when you get that critical point where you overcome the gravitational pull of the Earth and you're out into space. I'm using that as an analogy, as this thing's getting to that point. And when that point is reached, all of a sudden, you might see the repatriation of the dollar, which is just a fancy word to say all these dollars coming back into the U.S. to buy anything that they can. That's not a dollar. In other words, it's not a derivative of the dollar or the dollar itself. In other words, to buy real estate, stocks, anything but the bond market, anything but debt. And that is getting close as well. So you have like a synergistic situation where you have the escape from the dollar and the physical gold and silver markets, particularly gold, because that's the big daddy, all working almost simultaneously. And that's what a lot of people don't seem to get. And I think the gold bugs for the most part get it. But it's like a confluence of influence that all work together. And people might be very concerned about the debt market, for example, but think that gold isn't the way to go. They just want to be in the right currency. Or you have people that think that all that they need to be in is gold, and they don't really know how bad the debt situation is, although that's fairly unlikely. Yeah. But the idea is that there's so many things that one tips that domino, that tips 2, that tips 4, that tips 8, that tips 16, that keeps going. That's my point. That's the tipping point. It's not like there's one little thing that's going to take it. That one little thing that takes it could take another 2, 10, 20, 50. You get my point. It's going to accelerate. And that's the point where you might wake up one morning and say, uh-oh, you know that silver I was going to buy? It's not only up $10, but I can't get it.
Yeah, I can't find
That's
any.
the problem.
And I think that there will come a point, and a lot sooner than later, as far as being able to acquire gold or silver. Period. And as far as their availability, they're not going to go anywhere, but people just aren't going to sell it. They're not going to get rid of it. But wanted to ask you about, what do you see happening after the new electronic silver fix goes into place? Where are we going to go with that?
Oh, that's a great question. I wish I had a great answer. I'm really not sure. I'm not. First, I've kept my mouth shut on this issue because, I'm not afraid to stick my neck out. And if I have a strong opinion, I'm very easy to voice it. When the whole announcement came, I said, I'm just going to wait and see. These people at the top usually don't do things without thinking them through.
Right.
So when that announcement was made, there were other commentators that said, this is the end. It's going to be a free market. Look out. The price is going to explode and all this stuff. And, I hope they're right, but I'm not so sure about that. And then with these entities that are taking over the quote unquote fix, I think the fix is still in, Rory. I don't think it's going to change a whole lot. That's my opinion at this point. I'm still open. I don't have a strong opinion one way or the other, but I do want to reemphasize what we've already stated on your show, and that is that regardless of whatever they do, there is a day, and it could be like we've already seen, where you have a breakaway market where basically the physical markets take control for a while, and then they are able to put the genie back in the bottle for a while. I mean, that happened in 2008 in the silver market, particularly. It happened in gold to some degree. And yet, as strong as the physical demand was and the inability to deliver certain product took hold, it didn't last that long. It wasn't like the breaking point forever. It was a breaking point, but again, the paper derivatives market was able to take control back. Again, I think there's a point ahead of us where it doesn't matter who's in control, who's making the fix, or what's going on. And I want to just back up a bit and say about the physical availability at some point. I think, for some price, there's probably always going to be some gold and silver available. But my point is that the big players, the large hedge funds, those type of things, like the Eric Sprotts as an example, won't be able to go in the market and buy 22 million ounces of silver. It won't be able to be available. Sure, you'll be able to buy some 100-ounce bars or whatever. They're going to have a huge premium. What no one really discusses is there's an infinite demand for money. Infinite demand. There's no one out there hardly, and not everyone's greedy. It's just that this is the way we conduct our way to live. If you don't have money, unless you're an Aborigine, you have to have money. So there's a demand because there's a demand to live. And what people don't get is that they're living in a false reality that the demand that they have that's real is based on a fiction. So the 99.23% that believe in some currency might come to the realization all of a sudden that that doesn't work anymore. If you lived in Zimbabwe, you know that. If you lived in Argentina right now, you know that. If you lived in Weimar Republic, you know that. And no one's ever experienced it on a global basis. And that day is ahead of us. And I think you're right, Roy. I think it won't happen this year, but I think we're going to get close enough this year. Enough is going to happen this year, 2014, that instead of having maybe 1% of the global population awake and aware to what's happening, it may go to 2 or 3%. That's a double. Just think if the gold demand doubled overnight, what that would mean.
That would be, wow. That would be unreal. I mean, I don't think there would be anything available. Not for, I would think it would take months. I mean, if there was all of a sudden, if we went from 1% to 2% awareness in purchasing or moving into gold and moving into silver, man. You had mentioned the derivatives market. And from my perspective, David, I think that something is either broken or the powers that be are trying desperately to patch on a daily basis some type of problem that's going on that's trying to make its way to the surface. And what do you think that there's something going on in the derivatives market that we're not aware of, or is there something in fact broken back there in the shadow that is trying to get to the surface?
Well, the derivatives market's been broken for a very long time,
Okay.
and most people don't really understand what delta hedging really involves. But what you do is when you have the ability to print infinite amount of money, and I say money loosely, I mean currency. So if you make a bet and you say you're short silver, and you have set a certain price and the price goes against you, well, the delta hedging formula says all you do is you sell more. And if that doesn't work, you sell more. And if that doesn't work, you sell even more. And you keep selling until you move it into the direction that you need it to go. And eventually it works. And that works, and I put works in quotation marks because it works again and again and again until it doesn't. But the place to focus is not the silver market per se, it's the debt markets, because this is where the delta hedging thing has gotten so bizarre. It's beyond comprehension of how bad it is. Because what's going on is that the swap goes to derivative that goes to another swap that goes to another derivative, and it goes on and on and on.
Right.
And it's basically the basic concept I just outlined of delta hedging, where the bet's gone bad. So add to the bad bet. But that bad bet's worse. So add to that bad bet. And that bad bet is so bad that you've got to add more and more and more into that bad bet, and it's going bad. And that's where we're at, Rory. That's exactly where we're at.
Okay.
No one else is really talking about this, but that's it in a nutshell. I hope it's understood by everyone listening to the show, because it's the most important and critical thing out there. Because when this thing goes, it's going to go, and it's going to go down the history books of the financial annals of all time, because this is the worst predicament we've ever been put into. And again, it's the world at large.
I think that what you just said is the bond market is about to explode
At any time. And, I've been saying this for a while. I mean, I tried to pick the top of the bond market and I got pretty close, and not to pat myself on the back. Believe me, I mean, I'm, good at what I do. I'm not great. I'm not perfect. I make errors, but the debt markets is what I've emphasized again and again and again to my members, even though gold and silver are extremely critically important. The one to watch is the bond market, because the debt market is the keys of the kingdom. The entire system is based on something that cannot exist, and that's compound interest to infinity. And the whole thing is about interest rates and controlling those interest rates. What's this whole thing about?
Right.
It's all about the zero interest rate policy. Why? Because compound interest is an impossibility. You cannot continue it ad infinitum. It's impossible mathematically, yet the whole system pretends it's going to be okay. You know what? It's not okay. We're in a big mess, a huge mess. It's never been this bad before. And once again, will we learn from it? I don't know. The greatest lesson of history is that people don't learn the lessons of history.
No, they don't, and they're certainly not paying attention right now. And for the past month, it's been all about soccer, which is well, David, is there anything that you would like to add, or anything that our audience needs to know about at this point, as far as what do I need to do right now in order to put myself in a better position moving forward for the rest of the year?
Well, I think education is always the key. I think be fully informed, listen to all, believe none, as Chris Dwayne says. Do your own research. And I'll just do a plug for the website. I have a little kind of a summation of everything that I do. It's called silverspeculator.com. Just go to that URL, silverspeculator.com. It explains just about everything that we do here at the Morgan Report. It's just one URL, it's kind of an advertorial. But Roy, I really appreciate your questions. I really appreciate getting in depth on these topics. I mean, we get into the super minutia, which is not important. It's the big thinking, the big concepts. And hopefully I did a job for you and your listeners that will bring them to a point where they're not on the fence anymore, where they realize to their innermost being that it is important to not only know the truth, but to take action. I run across people often that are about ready to do something. About ready isn't doing it. There's a difference between trying something and doing it. You can try to pick up a pencil, but the word try doesn't mean that you've done it. When you actually do something is when it means something. So hopefully we'll get from that 1% to that 2% and see what happens to the derivatives market.
Hopefully so. And where can we find the Morgan report at, David?
It's simply themorganreport.com.
Okay. And silverinvestor.com, is that your other website?
It's the same website. Both URLs point to the same website, silver-investor.com. Yes.
All right. And I certainly appreciate your time this morning, and we will talk with you very soon.
Excellent. Thank you for having me.
Thank you. All right. Have a good afternoon.
Thanks.
Bye-bye.